can see the business on there. This was actually my first ever London session trade. I was just happened to be up and saw a high probability entry with a high probability target. Took my shot, and there's the business on that. All right. GK the Trader here. We're back again. Another market review. Never leave you guys dry. I'll never show you guys my executions and not come up on here and give you a review of everything I use to take the trades. So today is, I can't believe it, October 4th, 2023. It's been a very good start to the fall here. Fall usually yields some pretty good price action, at least for me. So enough talking, let's get straight into it. We're here on the daily time frame. Right here we made a swing high off of this order block here on Friday, and then Monday and Tuesday, and London session on today on Wednesday. We traded lower, clearing the sell side here, and more importantly, clearing the relative equal lows down here. So these two daily candles here, you see those two lows? If you go to the hourly time frame, it'll look a lot cleaner. And then between those lows, we have this little gap, this unfilled portion of the gap. So extend that out. See, we traded that, the sell side. So this would be what we call like a mohawk in price. Price likes to fill those in. So we traded down into that. Very deep discount. We've been trading lower a lot, and I believe Thursday in non-farm payroll, we may see it drive up above the buy side here. I could be wrong, which I don't have to be right to be profitable. Real traders know that. We're willing to change our bias after watching the opening range volatility and whatnot and everything else we use for our trade setups. But I believe that's what I think may take place here. We may be ripping up above the buy side here. So we have our discount raise traded to. Sell side was cleared here below the swing low. So this would be previous week's low. And then this May low here. Flipping over to NASDAQ. You can see these relative equal lows here on the daily time frame. The discount lows. We dipped into those, sweeping that. Traded into this discount imbalance. So taking the low to the high. You see we're right around equilibrium. Now here's the important part. Where do stop rates most times happen? Once we reach equilibrium. So now that we've reached equilibrium and we failed to take out this low where ES did, so we had that SMT divergence, which is what I used for my long today. We may want to see a run above this buy side here, these three clean highs here. And then if we take a look here, you can see these two lines here. It might be a little tough to see, but that's our new week opening gap and volume imbalance. So it was likely that we were going to draw back up to that. Look how inefficient that volume imbalance was here on that when we opened up on Sunday. So I wanted to see us draw back up into that today, and it happened beautifully. So without further ado, let's go ahead and get down to the business now that I just outlined everything on the daily time frame. So we reached that quote-unquote mohawk, the imbalance, the low end of that. We got below it, yeah, that's fine. Swept previous week's low here. London session, you guys saw the trade on there. So we opened here at midnight. Let's drag that out. So we had that midnight opening price here. We trade below that as bearish power 3. Blow out these lows right here. So 3 drives lower into that weekly discount array. what do we do then? At the right time of day, 3 o'clock a.m., very important hour, 3 a.m. to 4 a.m. That's our Silver Bowl hour for the London session. So right here, once we had that change in the state of delivery at 3 a.m., the proper time of day, that to me was okay. That flipped a switch, and I was like, okay, we're going to go towards these trailing buy stops here. So everyone's shorting. They're seeing all this movement down. They're like, oh yeah, it's bearish. We're about to really collapse. And then they're all trailing their buy stops above these highs here, which is what I would be targeting. So boom, this down close candle right here. This would be our 1 hour order block. See that? There we go. Took me a while, huh? As soon as we trade above the high here on the 1 hour order block, that's a change in the state of delivery at the proper time of day. And then look, the next hourly candle after that, we open, we trade right down to the high of it and respect it to the tick. That's not random, obviously. Let's go ahead and go down to the 15-minute time frame. So, actually, I'm not going to use the 15-minute time frame. I'm going to go ahead and go down to the 5-minute time frame, just because I don't really need the 15-minute time frame. But anyways, we create this intermittent term low here. We get our change in the state of delivery. This is blue shaded here. Remember, that's the order block. We create this intermittent term low, this swing low right here, swing low to the left of it, swing low to the right. We get this failure swing at this 5-minute order block right here. Extend that out. Boom. And then we have this small little imbalance we repriced to and respected to the tick with the bodies. With the bodies, that's important. And then once I saw that, I saw the expansion upwards. And we had yet declared buy side here and up here at the Asian session buy stops up here. I exited approximately around here on the NASDAQ. So boom, we get that expansion out of the intermittent term low after we traded below midnight opening price here. So this line right here. Keep this dash line in mind. Boom. So we get that initial expansion out of the consolidation here. And then boom, we dip right down institutional order flow into that 5-minute fair value gap. Boom. As soon as we do that and touch that high end of that 1 hour order block and gravitate back towards this dotted line here, which is the midnight opening, as soon as I see that, boom, I'm going long and I'm targeting the buy side up here. See these clean highs? Down to NQ. NQ, I took the long just because it looked a little better here and it had more upside potential. So take a look at this. If the executions in the beginning of the video, you would see I went long right here. No questions asked. Just apply everything that I just talked about in ES, bring it over here. We get that expansion, retracement back into this old high, coupled with this 5-minute imbalance here. So as soon as we do that, and we're still below midnight opening price, I'm longing, and I'm aiming for these highs. I exited somewhere up here, because I wanted to see these highs be swept as well, but, you know, I was being content with enough. Let's go down to the 1-minute time frame. So we had this failure swing here, and that 3 o'clock hour, very important. Like I said, 3 o'clock, 3 a.m. to 4 a.m., very important hour. We trade the whole way down to this small little 1-minute imbalance. That's where the failure swing took place. As soon as we get down to that 1-minute imbalance, and then these down close candles down here, this right here, that would be our 79% optimal trade entry. Right there. So we have our higher time frame key level traded into. We had our hourly change of state of delivery. We had the right time of day. And we have a reasonable target up here, but the buy stops. That would be a classic London session optimal trade entry. Obviously, I didn't trade that. I got the second distribution leg, which is the easiest trading model to trade. I'll get more into that with my private members, obviously. But yeah, let's get into the New York session now. Spent a lot of time on London here just because it, was pretty clean. So that's everything I used for my London trade. Let's go ahead and pop just straight up into New York session. So with all the context I laid out here with the London session, I'm expecting continuation to the upside, but obviously we want to see some type of retracement. So what happens right at that 10 o'clock news release? By the time we get there, we have yet to get to premium relative to yesterday's high to the low we made right at the opening range here. Before I went long, we still have yet to get to premium of the daily range. If you take this swing high here, this New York session high to the London session low of today, we did reach the premium of that range, but then look, we trade right back down to discount. Discount what? This discount hourly imbalance. Now where is this hourly imbalance at? It's within this the daily time frame imbalance I brought your attention to here, and we find beautiful support there. So as soon as we trade down there and then down into these down close candles, I'm looking to see for any type of longing setup once we hit those discount levels that were created in London. And then we left this London intermittent term low intact, which is obviously what we'd want to see. Let's go ahead and go down to the 15-minute time frame. Now, just for the sake of having too much stuff on my chart, I'm going to go ahead and start deleting stuff. There we go. Much better. So, what am I targeting? Targeting this imbalance up here. But more specifically, there's buy side above this institutional order flow entry draw from yesterday. Why specifically this high right here? Because it was yesterday's 10 a.m. high. We had news around 10 a.m. So that high would be important. This was where a lot of traders were shorting yesterday. And if there's going to be a lot of buy stops up here, as well as all these buy stops, but we already swept those. We didn't end up sweeping this buy side till the very end of the day, which is fine. I didn't need it to trade up here to be profitable. I just needed it to trade up to these highs here. So, when we're looking at this price action here, what are we looking at here? What are we looking at? This is a market maker buy model. The opening range, classic, creates this original consolidation, chops traders up, chopped me up. I took a couple losses. If you guys saw the live stream, I took 3 small losses. Nothing really significant. I was still in profit because of the London session trade I took. And then ultimately we caught the 14 handles here, and it ended up being a great day. But anyways, along with this discount array being traded into, and then we have this breaker down here, these 2 up close candles, see that? Extend that out, traded into a breaker. We have the sell side liquidity stacked up right here, and we sweep that beautifully. So you see these 2 lows, how they're relatively equal? Came down, swept that in a discount. And we almost reached 62% retracement level. We didn't need to get down there. We just needed to come down to the discount of the London swing point we created, or price leg we created, sorry. So you see we beautifully trade into that discount. 5-minute time frame. We create, what do we do? After we swept the sell side, we reach discount. We respect that. We come up, shift the whole way above the swing high right here. Shifted above the swing high, and then we get this failure swing right here, keeping this intermittent term low intact. If we lost this low today and we got below that, I wouldn't be looking at higher prices whatsoever. But the fact that we came down, failure to take out this low, and created this intermittent term low here. This swing low created here, swing low to the left, swing low to the right. As we hit that hourly imbalance, so just to avoid confusion, that's this level here. And we swept the sell side. All below what? The 930 opening price. So if you couple bearish power of 3 with identifying the market maker buy model, which is this, the original consolidation created in the opening range, and then we come down, create the low at a discount array, and then we start our distribution phase to come up and sweep the buy side. So you see these highs here, how they're relatively equal, lots of buy sides stacked up above there. Those who were thinking we came up here, they're like, oh, well, swept the buy side here. We came up, I think it's going to go lower now and get in sync with that daily time frame. Nope, that's not what we were thinking. Sorry, bud. So the whole way above, below that 930 opening to take care of business, we get that failure swing. And now it's time to go to the 1 minute time frame. Now, if you guys were watching the live stream, I went long right here, was in profit the whole way up here, and was looking for the buy side. Here's when the reality of trading sets in. You can be a genius, you can have everything right, your analysis could be spot on, and you can still lose money like this. I went long here, and my buy stop was right around here. Came the whole way up here. Once we did that, my buy stops went to break even right around here. But what did it do? It came the whole way down, took me out at break even, and then the real buy program was set in place. So the reality of trading is it's never 100% it's never 100% certainty that your trade's going to always play out. Sometimes you're going to have to take a loss in order to get in sync with your trade. You're not wrong, it just needs a way deeper retracement than you think it's going to have. And got stopped out of break even there, and what did I do? Re-entered right here. And I'm going to tell you why I re-entered right there. So these two black lines right here, so there's the market structure shift right there. These two black lines are denoting this 5 minute imbalance. Why am I choosing this 5 minute imbalance and nothing else? Obviously because it's at where I entered, but if you take a look at this, this is the 10 a.m. initial fair value gap created, and we had 10 o'clock high impact news driver. Boom. So that imbalance holds significance because it was the first imbalance created after that news release. So I'm watching that. And then once we came above this high, I saw us drop down into this 5 minute fair value gap, and boom, that's where I added my second contract. I got long somewhere down here in the 1 minute time frame. I'm going to get to that. And within that, we have this old 5 minute fair value gap, and you see the beautiful precision right there. Boom, exited right at the highs on 2 contracts. So let's go to the 1 minute time frame once more. Now, as soon as I saw us drop down into here, that's where I went long 1 contract. You can go back and look at the executions in the beginning of the video. 1 contract here, traded higher, came down, swept the sell stops here from traders that were chasing the higher move up, obviously. Comes down into the 5 minute imbalance, boom. No hesitation at all, not even batting an eye. Add another contract right there, exiting both right at the buy side high to complete the market maker buy model. We had this inversion fair value gap here, coupled with my long entry here with this 1 minute gap. See that? Beautiful. I can take that off. Now to piece it all together, when did this all take place? Take this entire shaded area, and you can see it's 10:50 to 11:10. So this will be our second New York session macro after the 9:30 opening range. So we had the failure swing, and the move started. The macro doesn't complete the move, it starts the move. That's very important. So we had the failure swing here, and the move started right at that macro. So that's what I was trading. Exited up at the buy side here, premium buy side. And we had a higher draw up here. And one more thing I wanted to note. We had this 15-minute imbalance above the highs as well. You see that? So that's another thing you could have targeted. So lots of things laid out here today for free that are sold all the time for much more. If this was insightful, please hit the like button. Let me know that you found it insightful. And I will see you guys tomorrow on a live stream, and I will see you at Non-Farm Payroll. Thanks for watching.